Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday the 13th. All right, now we've been waiting for Thursday to kick around all week. Right, we've got a huge amount of major high-impacting economic events. We've got the Bank of England meeting. We've got the ECB meeting. Two central banks, always a very volatile time and potentially a trend-changing situation. I think with all the geopolitical things going on at the same time, probably puts the central banks on the back foot, but still it's going to be a pretty epic day, especially with US CPI at the back end of it. So as you come into the market today, once again, it's all about timing. Aussie and Kiwi, let me just make that pen a little bit thicker. Both still cruising to the downside. Now, it may look like they've changed direction. They actually haven't. There's short-term stop-loss run, and this is based on, once again, I couldn't believe it when I read it because I ended up getting short in the 20s, squared those up around 15. So like a 10-point profit. It wasn't going anywhere, waiting for the US PPI. Next thing you know, that comes out a little bit weak, sends the currency a little bit higher. And then there's, I was going to say, bullshit story about, potentially positive trade talks with US and China. All that is Munchin or whoever's running the trade stuff has basically sent an invite to Beijing saying, let's have some more talks. And that's what they've got excited about is the trade, that all sort of resolving itself, which is an absolute load of crap. So I think it's just a political stunt. Dollar yen, as I sort of mentioned yesterday, just back in the groove sideways. Dollar yen, when dollar yen is on, it makes all the yen crosses active as well, and it gives the dollar a specific direction. This has been just a very tired, lethargic, 80-year-old sort of walking around the paddock. That's how dollar yen's been trading, and it's a little bit confusing for people. And I'll come into that a bit later. Now, Euro's just been sort of washing around. There's been no specific direction from the ECB, and that should be hopefully clarified today with the ECB meeting. And you know what? It's a good sign of exactly what's going on in the US dollar. You can just see blips up and down. It's not really going anywhere. Cable, well, we've got that sort of short-term top. You can see here the price action around the support and resistance lines. It's getting a little bit messy. This pair, it's all about Brexit. There's Brexit news all over the place. Some positive, some a little bit negative. What that's creating is a very toxic price action at the moment. So there's no continuity or connection to the fundamentals or the geopolitical situation. And then on top of that, you throw the Bank of England on top of that. Now we've got a real crazy situation. Now, dollar CAD, oil has finally started to move higher up to $70. Now, this is like NAFTA. This is another crazy situation where the Canadian dollar, or Canada in general, has got the US standing over the top of them with NAFTA, this whole unsigned NAFTA agreement, all these sorts of things. It's creating volatile trading. Of course, I've got the central bank of the Bank of Canada, in a hawkish mode. They have said interest rates need to go up. So we expected the CAD to rally, but it's more driven around, when that happens, it's around the geopolitical side of things. If I just come over here, like that's the situation on the majors. Now, if I just come across here to the, looking at the US dollar, as you can see, like the dollar itself, let me make that a bit thicker, sideways, and then it's just had a little bit of a stop-loss run down through sort of 94, 95. Mate, it's only gone like 10 or 15 points. This is not a big dollar sell-off. What we're seeing is a massive situation where dollar one, I mean, tell me the Chinese aren't making a load of money out of this. Look at this price action. It's dropped from 687, 400 points down to 683. Okay, in thin markets during that sort of North American session. And that's on those rubbish trade talks. That is the main reason why Aussie and Kiwi are higher. Otherwise, they would not be higher. So when you come back to look at the major currencies, you find out what the raw nerve was. And for me, when I look at across the pairs here, it's this sucker here. I mean, this is the big standout, and it's driven the dollar lower. But you can see here, the overall dollar move has been, 15 or 20, 30 points. Here, it's moved 400 points, and it's all dollar China, which is a damn joke. So you come back across to what I'm looking for is news. If you come over to the general news pages, and I've got a few here, Dollar falls on hopes for US trade talk. As I said, that's just on an invite to Beijing to have a discussion on the hopes. I mean, it's such a hoax, not a hope. Dollar CAD, we're all talking about NAFTA. We're not talking about economic numbers. Sterling, it's all about Brexit, not about economic numbers. OPEC, they're doing their best to mess things up here. Then you've got the emerging markets, Brazil, Turkey, the Indian rupee. They're all in all sorts of trouble. And that's pretty much it. So as you can see, the geopolitical situation is once again really dominating the framework. But today it's going to change a little bit because we do have, this is like watching the minor sports events. Now we get the main event coming up. The only disappointing thing, or the only shame, is geopolitics are dominating the framework. So you can't really gauge, is it still on? Is it off? Okay, is the momentum to the top side still on, or what are we doing? Okay, that's really screws things up. But let me just run through what we've got coming out. So we've got the Aussie employment numbers. Now, this is a big number because it impacts consumer confidence. It impacts retail sales. It actually is a massive social number, not only just an economic number. So the employment numbers today for the Aussie could send it up or down. To me, the overall tone for the Aussie is still bearish, but this is where these employment numbers can actually change that. If they are strong, well, the Aussie is just going to start trading sideways and will take the pressure off the downside. Then you come into the two big events. Now, the Bank of England. Now, there's no change in rates expected, even though inflation is up around 2.4, 2.5%. I expect them to probably expect them to remain on hold, but probably come in with a hawkish tone like the Bank of Canada did. Okay? They didn't change rates, but they came out and said, you know what, we're going to have to raise interest rates if inflation remains high, which is exactly what the Bank of Canada did. And then we've got the ECB. Now, I think Mario has had the best time out of all the central bankers the last 3 to 6 months. He's just going, you know what, we're just going to wait and see what happens with the numbers. He's seen a lot of rubbish talk about EU, US trade agreements being torn up, all sorts of things. They seem to have settled down. The euro is actually just trading probably quite nicely in a very large range. So no changes expected from the ECB. If they do give us a definite timeline when they're going to reduce their QE, well, then you will see the euro pop to the top side. But I don't think we'll see that yet. Now, just at the same time that ECB start to explain their decisions that came out 45 minutes earlier, we do get the solid US CPI number. Now, this is important for all major currency pairs. The US dollar, these CPI numbers, if they're strong, well, pushes them straight into the interest rate hikes. If it's really weak, which I can't really see it, then we will see all the majors bounce very aggressively. Right? This is the main game. Like these two events here, okay, the ECB and the euro. Like there's a lot of cloak and dagger. We're going to try and decipher this statement because we don't expect a change in rates. When there is no interest rate change expected, trading these events becomes hazardous, right? Especially when there's speeches afterwards. So don't pin your hopes on getting clear direction from the Bank of England or the ECB immediately. It will probably be apparent 45 minutes or an hour afterwards, once the dust settles, what they're going to do. And don't forget, the real major event here is the US CPI number. This is a raw number. There will be no confusion with whether it's strong, weak, or as expected. And this is probably your best trading opportunity where you need to be looking at the markets. This is when the major currency pairs will really turn on. Now, of course, you've got to be aware of the ECB press conference. There could be some action there. And then it rolls into Friday's Kiwi business manufacturing stuff. So that's what we've got ahead. So big stuff. Asia, Aussie employment. So focus on the Aussie and the Aussie crosses, very much so. And you're watching dollar yuan very closely. Well, that sucker's moved 400 points to the downside. You've got to expect it to bounce again, right? But the Aussie, if you are trading around the Aussie, the momentum driven from these Aussie releases, well, then you've got to be keeping one eye on the yuan anyway, because it could dominate the overall move. Then as you come into the European session, clearly the ECB and the Bank of England, watch those events. I would say just watch them at the moment. And if you see something outrageous, I expect them to be hawkish with inflation above 2%. ECB, probably neutral to flat. And then obviously, as I said, the main event to me is the US CPI. This this is a great trading opportunity. That's why it's a real pisser that there's the hopes on these trade talks comes up now, because I want the US dollar neutral going into that, or with a slight bias to the top side, which it's had. Now it's come off a bit. It confuses the market somewhat. The US CPI number is one of the best releases to get momentum and direction out of these numbers. So that's where we are with the major pairs. Now, I know some of these currencies have moved around a bit, but they're only moving around on the hourly perspective. To me, still, the Aussie is bearish, the Kiwi is still bearish, and sterling is bullish. The rest of these currencies are still just trading sideways. There's nothing to really get excited about. The Aussie will be, if the employment numbers come out strong, well, that'll probably go into a sideways trading opportunity, because we've got bearish daily and weekly charts, and then we'll have sort of bullish economic data, neutral central bank, that'll be sideways. So a lot depends on these employment numbers. If they're weak, we could have a nice trade to the downside, although that goes against the recent move in the yuan. And so just having a look at this, the sentiment coming out of the Bank of England is going to be very important for sterling. Although, once again, there's so much Brexit news at the moment, euphoria about a deal, no deal, all this sort of stuff. It makes trading sterling a little bit hazardous. Doesn't mean you probably don't trade it, but just reduce your trade size if need be. All right, and that's where we are with the major pairs. So when you come back and you're sizing up the major currency pairs themselves, what we're looking for is, you're looking for two things. You're looking for good entry levels, okay? And you can see here on the Aussie and Kiwi, they've been blown away somewhat. The levels, that would have been nice if we had strong numbers and punching through that with that move in the yuan. Yeah, that would have been nice, but that's over. So now we're going to focus on momentum and entry levels. The good thing is, now that sterling's been messing about a bit, okay, we've got, you're raising that resistance level, just adjusting the support to the new level. So we've got actually some levels here in sterling. The only thing we don't have in sterling is clarity around, because it's, as I said, the Bank of England is not looking to change rates. So the opportunity comes out of the statement and their forward guidance and any comments that the Bank of England Governor Carney wants to say. So that's going to be a little bit tricky, even though we have levels. At this point, it's just trading sideways. Dollar CAD, well, it's probably going to be on the sidelines at this point with NAFTA, oil, everything else that's going on in Canada. Euro, probably out of the sterling and euro, the two big events. Euro looks pretty much the nicest pair at this point. It's got really nice technicals, and I expect Draghi to be quite clear with regards what his plan is, which is probably as business as usual, wait and see what happens with the data. So that's euro has got the calmest price action, which is easier to trade, and no geopolitical events. So that's where we are with that. And dollar yen, well, all you're doing here is just adjusting highs and lows, and you're not really getting any momentum either side. It's going to continue to trade sideways. So really, the Aussie data coming out, okay, it's really the Aussie. And up here, overall, it still has a bearish sentiment. And if you're looking for where you can get clarity on that, if you come over here to sort of like the daily charts, okay, this is the long-term picture here. Aussie's still lower. It's just retracing back to the break level, which is a really nice sell level. So don't be afraid to be getting short there, back towards that level if the employment data is weak. Now, with that recent rally in the yuan, if the employment numbers are strong, well, then a break trade above on the top side is definitely a big chance for the Aussie. Dollar yen trading up, now just trading sideways. Euro was trading down, now just trading sideways. And you can see sterling now just basically trading sideways through that resistance line. It hasn't really worked into a hugely aggressive upward bias, but it's not far off it. And dollar CAD just trading chopping around in a big, broad range. So that's your daily charts, right? So to me, that's where the sentiment here from that I'm looking at with regards the major pairs here, a lot of that comes from. All right, just want to give you a bit more perspective on that. So all in all, big day. Don't forget, if you have a look across the board of the numbers, there are extra numbers coming out. Now, the machinery orders are a pretty big number here for Japan, and they've just dropped literally like 8 seconds ago. Massive numbers, right? So this should put, to me, upward bias on dollar yen. That's going to give the Nikkei a real good shot in the arm and move it topside. So we may see dollar yen move to the top side as we move into the start of that Asian session. Don't forget the Japanese equity market doesn't open for 10 minutes. All right, then you got the Aussie employment numbers. You got some final CPI numbers out of Germany. I'm not too worried about that. And that then leads us into the Bank of England and the ECB. Massive day ahead. Just keep control of your capital, and just basically make sure you're not overextending your risk at this point. All right, so that's where we are, guys. We've been waiting for this day all week. Now, don't ruin it on the first trade. So make sure you take your time and nail the opportunities as they pop up. All right, guys, have a good day. We'll see you in the trade zone. Cheerio.